Good morning, traders. Richard here doing a quick point and figure chart review of the S&P 500 Index. I'll start with the Ichimoku cloud just to give some ideas to where this current rally might be heading. We have a nice strong rally on our hands here. Price action still above the cloud. That's bullish, and we've used a Fibonacci projection here of this move from this low to that high there to give us roughly an idea where this rally can head to. So the first stop would be this 38 extension, and then the 50% extension there just under the 6,000 zone. So 5924 there, 5944, and then this target of 5772. Now we can see here we've got a little bit of resistance to get past here, front cloud projected resistance, so the market's battling that. And depending how the earnings season is going to pan out, will this the AI bubble continue pushing higher, or will we get some form of a consolidation and a pullback here due to seasonality, since August and September can generally be seasonally weak periods in the market, and then we could come back to retest the bottom end of the cloud here. But be aware of that. Watching very carefully if we're going to get to the 5772 and just about the 6,001. So the market looks like it wants to get to that 6,000 level. And if we look at this move from this low to that high, project that on top of here, the highest can be much higher for the S&P 500. Now let's go look at the point and figure chart. I've got the 50/3 point and figure chart, which means a 150 point drop to the downside will change this chart from an X to an O, and that will signal the end of the trend. So currently we do have our finger on the pulse. As soon as we get that reversal, we know the current rally is losing steam. Now recently the index took out 5,400 upside targets here, 5.5, and you can see the next one is 6,000, and that's that's the upside target on this 50/3 point figure chart, and 6,100. So these are the two immediate upside targets that we're looking for this particular move. Do note that this is a strong move, so upward continuation pattern, up move, consolidation, up move, consolidation. So depending on when we touch the 6,000, will we then get a seasonal correction down to maybe a September-October low, where we consolidate and digest this move, and then we could see a pullback back down to 5.5 even, and 5.4. But the immediate target, upside targets, is 6,000 and 6,100, and the question is, will we get there in this current earnings season, driven by the AI bubble, as well as the expectation that rates will be cut later the year. Now turning to the logarithmic scale, I've got the 1%/3 log scale point and figure chart here. We can see we took out a whole cluster of point and figure charts targets here, and more recently took out 5635 there, major upside target, and then 5692 is the next one. We're about a 1% away from that, and 5806 or 5800 there, we're about 3% away from that upside point and figure chart target. So from these two point and figure chart targets, we can see we're looking for a target range between 5.8 and 6,000, depending on if you're using the logarithmic scale point and figure or the normal one there. So these are the upside targets. We're looking at 5,800 to 6,000 on a point and figure chart basis. And in terms of risk, just look out for those reversals. Any kind of drop to the downside in terms of a point and figure chart reversal will signal the end of the current trend. Until next time, happy Ichimoku and point and figure chart trading. Bye for now.